Welcome to this explainer. Let's dive into the Companies Act and see how modern businesses are actually built.
Imagine you're starting a samosa business. Should you go sole proprietor or form a company? It totally matters.
If things go south, a sole proprietorship risks your personal house. But a company, it shields your assets.
That shield exists because companies literally have legal superpowers. Let's quickly break down these 5 key features. First up, perpetual succession. Founders might leave or pass away, but the company lives on, like ITC. Second, it's an artificial legal person. Yep, it can sign contracts, but it definitely can't go to jail. Third is the corporate veil. Legally speaking, the company and its owners are totally separate entities. The famous Salomon case proved this. His shoe company tanked, but his personal wealth stayed perfectly safe.
So how do these companies interact with each other? Let's untangle this whole corporate relationship web.
A holding company basically controls a subsidiary if it owns more than 50% of the voting power.
Now, if it holds 20%, but not a majority, it's an associate company. That means significant influence.
Crucial point here, any shares held in a trust or fiduciary capacity, they don't count toward voting power. And don't forget the chain rule. A subsidiary automatically belongs to the original holding company. Moving on to scope. What's the real difference between a private and a public company? Private companies restrict share transfers and block public funding. Public companies, though, they're completely open for business.
Plus, private companies are strictly capped at 200 members. Public ones literally have no limit.
When counting to 200, joint owners count as one, and you completely exclude your employee shareholders.
Inside private companies, there's a neat category called a small company. So what actually defines this?
Well, to qualify, the company's paid-up share capital absolutely cannot exceed 4 crore rupees.
And at the exact same time, the turnover from the last financial year can't top 40 crore rupees. Keep in mind, a public company can never be a small company, no matter what its financials say. We've decoded the metrics. So, which legal structure will you actually choose for your next big venture?